Today, we're unpacking one of the boldest economic pivots in recent history. We're talking about how the United Arab Emirates went from being this world-famous zero tax haven to a powerhouse of digital taxation. Let's dive in. For, decades, the UAE's whole identity was built on being this tax-free paradise for entrepreneurs and global businesses. It was a huge, huge part of its appeal. But that whole landscape, it hasn't just changed. It's been completely redrawn. And that, of course, leads to the big question. If the zero tax model was so wildly successful, why on earth would you tear up the playbook? What was the driver behind this massive pivot?
Well, the answer is, this wasn't some knee-jerk reaction. Nope. This was a really calculated, long-term play. It's all about future-proofing the economy, you see, shifting the nation's engine from relying so much on oil to a much more diversified, sustainable model.
This isn't just about collecting money. It's a strategy with a bunch of different goals. This new tax system, it's designed to create stable funding for absolutely world-class public services, drive sustainable development, and, this is crucial, align the UAE with global financial standards. It's all about making it an even safer, more attractive hub for legitimate international business. And this quote right here, it just perfectly captures the whole mindset. Tax in the UAE isn't just another line item on a spreadsheet. It's being used as a strategic tool to build a really resilient, modern nation for the long haul. So, what does this new system actually look like for a business on the ground? Well, it really just boils down to two main things. Value-added tax, you've probably heard it called VAT, and corporate tax. At the highest level, the difference is actually pretty simple. VAT is a tax on consumption, so the goods and services that people buy. Corporate tax, on the other hand, that's a direct tax on a business's profits. Just think of it like this: what you spend versus what you earn. Let's look just a little closer. See, VAT is what's called an indirect tax. Businesses collect it for the government, but the final cost is ultimately passed along to the consumer. Corporate tax is direct. It's charged right on a company's net earnings. So with VAT, the key thing to remember is that the tax gets applied at each little step of the supply chain. But when all is said and done, it's the end consumer who actually foots the bill. And with corporate tax, the absolute key word here is net. This is not a tax on a company's total revenue. It's a tax on its profits, after all the expenses. The rates themselves are designed to be super competitive, making sure that UAE stays a really attractive place to do business. Okay, so we've covered the what and the why, but what about the how? Because this is where the UAE's modern tech-first approach really, really shines, all under this powerful idea they call zero bureaucracy. I mean it. Forget stacks of paperwork. Every single tax interaction, I'm talking from registration and filing all the way to payments, it's all handled through one central digital platform called Amara Tax. And your key to this whole system, it's your secure National Digital ID UAE Pass. The entire journey is just designed to be incredibly streamlined. You get your UAE Pass, you register your business on the Emira Tax portal, and right from there, you can file your returns, make payments, all from one single dashboard. It's a completely digital experience from start to finish. And this digital-first approach, it delivers real, tangible results. For example, the government has slashed the processing time for VAT refunds for visiting foreign businesses by a staggering 67%. I mean, that's a powerful statement about efficiency. So you have to understand, this is not just some catchy tagline. The Zero Bureaucracy Program is an official government initiative with one crystal clear goal: make tax compliance as painless and as efficient as humanly possible for every single person. So how does all of this fit together on the world stage? Well, this tax system isn't just about domestic policy. It's a really strategic move to position the UAE as a leading and, just as importantly, a trusted global player. The strategy is kind of like a two-sided coin. On one side, the goal is to keep the UAE a super competitive and attractive hub for global business. But on the other side, it's about meeting strict international standards for fairness and transparency, which is what attracts stable, long-term investment. A key part of this is something called the Economic Substance Regulations. Now, in simple terms, these rules are just there to make sure that companies operating in the UAE have a real, physical presence, with offices and employees, and aren't just shell companies that are set up for tax avoidance. This builds a ton of trust with international partners. And the UAE is actively backing this all up with action. By signing agreements like this Memorandum of Understanding with China's tax authority, they're making sure the system is recognized, respected, and totally integrated into the global financial landscape. So let's just quickly recap the key takeaways here. First, this was a deliberate, strategic shift to build a sustainable post-oil economy. Second, the system is built on two pillars: VAT on consumption and corporate tax on profit. Third, compliance is digital first, which makes it incredibly efficient. And finally, the whole system is designed for global alignment, which really cements the UAE's position as a premier, trustworthy business hub. All of this leaves us with one final, pretty fascinating question. By combining this modern digital-first platform with business-friendly rates and a real commitment to global standards, is the UAE actually creating the blueprint for the world's most efficient tax model? It's definitely a compelling thought for the future of global business. Thanks for watching.